Thank you for being here for this portion of the presentation. My name is Addison Snell. I'm with Intersect360 Research. We are analysts who cover the high-performance computing market, the hyperscale market, and other high-performance data center trends. And I've got a quick HPC market update talk that covers some of the top insights from our most recent research. This includes our most recent market update forecast and market model from 2017. And I'll give some high-level numbers and trends from this. You'll notice that some of the specific numbers from some of the charts are missing, and that is specifically because those go to our clients first for a while, and we don't want to give away all of them in a public presentation, but I've certainly got enough detail here to talk about the detailed analysis. If there's anything that you want more information on, generally there's a footnote at the bottom of the slide where we talk about what report the information comes from, and that can be required separately, or you can always reach out to me or any of our other industry analysts. At the top level, the worldwide HPC market reached $35.4 billion in 2017. That's up 1.6% from 2016. Now, when we talk about the total worldwide HPC market, we're talking about all product and services spending here. So that includes servers, storage, software, networking components, cloud, et cetera. We look at a lot more than just the server portion of the market for a complete HPC environment. It's worth saying that from a budgetary perspective, there are a lot of other things we could get into, such as facilities or staffing, things that are internally spent that are part of an HPC budget. We do track those as well in our demand-side surveys. They tend not to be described by analysts as part of a market size because it's not money that leaves a company. We're talking about things that are bought. But they are important in terms of the overall analysis. This was a funny year for us in terms of doing a market analysis for this industry. The HPC market is a complicated one to track. And anytime you see any analyst data for high-performance computing, you ought to look hard at the methodology and where the information is coming from. Don't let any analyst imply that we just get perfect data from all of the vendors and put that into a chart and then get to present it. Because in high-performance computing, it's more challenging. The predominant vendors in this space, high-performance computing is a subset of an overall enterprise computing business unit for the most part. So from a quarterly report, we can read off what the business unit did, but what the HPC group within that might be quite different. And also different companies use different definitions for what constitutes high-performance computing. Some people count only scientific or academic supercomputing, and then they sell a high-performance system to finance, but that's enterprise and doesn't count for them as HPC, where it does fit inside our envelope or our methodology of how we count HPC. So we have to complement all of the supply-side analysis from vendors that we do with a healthy amount of demand-side research from the end-user community, and we've been doing that for more than 10 years now. And that includes budget indications of how spending changes year on year and what the outlook is going forward. That's been working really well. And for 10 years, did us the favor of, we would do the supply-side analysis, and then we'd do the demand-side analysis, and they would meet in the middle, and we'd go, great, we've got it. And then we'd publish those numbers. This was the first year where they got really significantly out of sync, where from a demand-side perspective, the blended by-sector average budget, after we reweighted for commercial, government, academia, it looked like spending was up by about 5.6%. But then when we looked at the supply side indicators, it looked like the market was flat to down. So there was more than we could just wave away. We had to find out where the difference was. And the only way through that is to just, let's assume both are true and figure out how they're both true. And there were some interesting discrepancies in the market. When you look at that 1.6% growth, that looks like a fairly stable market. And that belies the fact that underneath that, there were some very compelling industry dynamics going on. Now, one part of the budget that didn't show up in the spending is on the commercial side of the market, which is more than half by revenue. Facility spending went up sharply. And that was masked to some extent by the fact that in some commercial organizations that got so dramatic that they just took it out of the budget, right? So you're not going to pay for that, but you also took a hit to the budget besides. That facility spending was consuming a larger portion of the budget, so not all of the demand-side budget increase made it out into the market in terms of product and services. The next thing that happened is cloud computing really had a breakout year, which we'd been waiting for a while, but it did grow sharply last year at 44% overall and largely concentrated into the higher value segments, and I'll show a chart on that specifically. Storage was weak to server spending, and that's because people were buying more computationally heavy configurations, mostly with GPUs and predominantly because of the influx of machine learning. And this is really echoing the trend that we saw 5 years ago in big data when storage got a bit of a bump, not because people were buying so much more storage in terms of bytes, but people mixed in more flash, and that led to more dollars per byte for the same amount of capacity, and storage got a bump. Now we're seeing similar with compute. People might buy the same number of nodes, but they're more GPU heavy, and that translates to more dollars going into servers. Some vendors, when we looked at their quarterly and annual results, looked like at a business unit level, in fact, at a business unit level, they were flat to down, like I said, but HPC was taking a greater proportion of that value because those same vendors were flat to down also in general enterprise space or particularly in hyperscale, and we were able to unknit that. And the software and services categories both declined. So where these things normally all track together, 2017 versus 2016 really looked remarkably different, where servers had that normal, healthy, high single-digit growth where they were up more than 7%. Storage was up but less than 3%. The next big categories, networks, software, services, all showed different declines. Now, networks, it's worth saying here, that blue band, third from the top, that's not really all networks. Most networking components in this space are bought as components of servers or storage systems. And when that happens, you have a system interconnect or a storage interconnect that's part of a complete cluster, part of a storage system. They tend to get wrapped into those other buckets. So when you see networks a la carte, that's really typically from people building out their own systems, which does happen a healthy amount in this space. And networking going down like that is an indication of fewer people building their own systems and going more toward configured systems from named vendors. Then you see that thinner green part at the top. Cloud has been a small but fast-growing part of this market and really had a breakout year last year, growing 44%. That took it across the billion-dollar mark to reach $1.1 billion in 2017, and will maintain that big growth rate for the next several years, particularly in the nearer-term years in the forecast. We expect it to go to $2 billion next year in 2019 and near $3 billion in 2022 at the end of the forecast. So you see that fairly flat 1.6% growth at the top level, but underneath that, very different things happen in all of those different categories. And if we blow out the cloud segment, that's where you see that raw cycles at the bottom grew along with market rates. It grew at the same 7% rate that everything else did, but storage got a bit of a bump. What we call infrastructure hosting, which is the IaaS and PaaS part of the market, had big growth. Application hosting, the SaaS part, was really the biggest growth at more than double, 125%. That came from a few different things. One obvious thing that happened is, of course, machine learning and people moving a lot of those applications to cloud. The machine learning types of applications have a great deal of cloud affinity and have their roots in the hyperscale segment, so it's natural to migrate those to a lot of the major cloud providers. But I think beyond that being the obvious one, the more important thing that happened here is the maturation of licensing models, particularly for ISV codes in the high-performance computing space. It got easier in 2017 to migrate your Abacus license to the cloud, or Fluent or Ansys or what have you. And that caused a lot of the spike for the higher value components like SaaS. In the forecast, we do see a return to steady growth, predominantly because the budget outlooks have improved across all three sectors. In particular, Government, although it's not the biggest component or the rosiest outlook, government did get the best forward-looking output that it's had in the last 5 years. That's been really flat and is finally starting to re-engage again. So that's going to unlock some of the growth that we see here. Servers are still obviously the largest component, followed by software. But when you look at that green bar second from the top in cloud, that's where you really can see that starting to engage and become more of a proportion of the market. Now, when we talk about cloud here, I want to emphasize what we're talking about is essentially utility computing for HPC applications. I'm an HPC user. I want to run that on some public cloud and pay for that. I'm not talking about all of the servers that Amazon buys for the purpose of AWS or hyperscale in general. That would be a much, much larger number. That's what we track in the hyperscale segment, right, is the servers that go into Amazon and Facebook and Google. That's hyperscale. When we talk about cloud here, we're talking about paying to run your HPC application on a cloud. The other important thing about that, and I'm focusing a lot on cloud, I know, but it's a dynamic part of the market, is most of this, almost all of it, is going to be hybrid cloud. We see very few HPC end users who are saying, you know, this cloud stuff is great. I'm just going to take my current supercomputing infrastructure and throw it away. I don't need that anymore. That's not really what we see. What we see is cloud augmenting or people using it as an additional HPC resource and finding over time what the balance of on-premise versus off-premise is. We do not forecast that cloud is going to take over all of HPC. It will continue high growth for a little while. The growth will slow down. It will find an asymptote, and it will be a long-term part of the HPC market, predominantly as hybrid. We do see some people who go all 100% cloud. They tend to be smaller HPC users, which again doesn't move the needle quite as much when you take all of their revenue. The larger an HPC user is, the less likely it is that they're going to shut everything down and move it all to the cloud. But cloud is a growing part of this space. Now, we see this long-term stable growth in this market and also long-term stable growth for HPC. The drivers here are important. The fundamental drivers for HPC and why we track it as a separate market that's important here, and it's not going away, is just because of science, right? That there are harder, it's possible that one day somebody's going to go, great, I finished. Science is done. There's nothing left. We've solved it all. That might be a very long-range thing that can happen, but I'm not forecasting it in the next 5 years or even probably the next 500 years. I think there are going to be harder problems to solve, and that fuels HPC, not only in the research space, but with more than half of HPC usage being commercial, it fuels innovation, it fuels engineering and new products, and we take science and then we do things with it. And it's a very dynamic space. Now, for HPC in the cloud, the dynamics are good there also. They're suitable to variable workloads. There's lots of high-performance components there now, again, largely thanks to machine learning giving that a goose. The maturation of licensing models has been important. And then a big plus for both right now is AI. AI is a great affinity to high performance and a great affinity to cloud. So right now, it's proving to be a driver on both sides. When we look at this from server classes, separating out entry-level, mid-range, high-end supercomputer, in 2017, the highest growth was in the highest end of the market. Supercomputers started going again. I'm not going to break out all the different growth rates here, but we are providing this report to our clients. It's not dramatically different, but there was higher growth in supercomputing, and then the growth rate kind of decreases the further down you go in the market. I should say, for those of you who are fans of multiple analysts in this space, that I know that there are other analysts who have similar breakouts that use different words, but double click on that because other analysts' boundaries for these different classes are not the same as our boundaries, and I encourage you to really look carefully at where the boundaries are when you evaluate the size of these different spaces and look at what makes sense and doesn't make sense. We're fairly comfortable with our methodology here for what constitutes a supercomputer and what the growth rates are. So these are our breakouts for that. More interesting is the vertical markets. Academic overall is 17.7% of the market and is just one big wedge. We don't break that out further because they tend to be mixed-use environments, even though they're running multiple applications. Government is about a quarter of the market and mostly divides between the security, defense, and military types of applications versus the more researchy research labs. We have a segment called national agencies. That's where we put single focus national research labs. So if it's what's labeled national research lab here would be general science research labs that does all kinds of things. But if you go to a weather facility like ECMWF or something like the National Cancer Institute, and you have a single emphasis of focus, we put that in the national agency bucket. We don't have weather as a vertical market because weather is not a vertical market. It's a type of application that's horizontal that belongs in a lot of different spaces. If you want to ask us about weather, we can break it out, but it's partly in academia, it's partly in national research labs, it's partly in national agencies, and it's partly in the commercial side. It fits in a lot of different spaces. It's not a vertical market. It's a horizontal, like computational fluid dynamics. It's a type of application that could be run by different verticals. And then more than half of the market, like I was saying, and most of the growth rate is on the commercial side. The largest vertical markets here, and again, a big difference between us and other analysts, financial services is one of the largest vertical markets in HPC, and I don't understand other analysts who haven't had that there for a long time. Financial services is one of the biggest consumers of HPC across risk management, across trading, across analytics, and across pricing applications, and I'll come back to that in a second. That's about the same size as the entire manufacturing vertical together, which would include both large product manufacturing and then a little further along the wheel, consumer product manufacturing, which we break out here as separate because some of our clients like to see those as separate, selling to P&G or Unilever being different than selling to General Motors or Boeing, right? But they're both fundamentally the same kinds of applications. And if you put them together, it's about the same size as the finance is. There are a lot of other areas. Biosciences is very diverse, a lot of different use cases, a lot of different user types. And then you can read around the rest. There are two that I want to spend a moment talking about. Financial services I was coming back to. Because this is the vertical market that's the furthest ahead in all of HPC in terms of real use cases for dedicated spending with deep learning. I know we love talking about self-driving cars and personalized medicine. I promise you, you are going to have personalized interest rates way before you have personalized medicine. That is where most of the money is, and it's the areas that have money in them, like finance and retail and advertising and hyperscale, that are driving a lot more of the immediate investment in machine learning. It is the one HPC segment in 2017 where we saw the most dedicated spending for deep learning. The other one I highlighted here, you see the word chemical there. That's not chemistry like biochemistry, like molecular modeling in the biosciences side, like done at the pharmas. Here I'm talking about chemical engineering for companies like Dow or DuPont or 3M or BASF. And in fact, I'll have a guest from BASF here on my panel in a few moments. This has been on our watch list for 10 years, and I can point to reports that we wrote 10 years ago, having this on our watch list for investment in more high-performance computing, because we noticed that they were all tended to be experienced HPC users, but almost all of that usage we perceived to be in the process side, like having CFD in a mixed tank to get optimal yield on the creation of my plastic or whatever chemical it was. But we saw relatively little use of HPC on the discovery side, the molecular modeling of using HPC in the discovery of more plastics, polymers, materials, and the like. And it seemed natural that that would follow the path that we had seen in biosciences before. We're now seeing indicators that some of the real leading chemical engineering companies are investing more in supercomputing capabilities, and we see that as an indicator of leadership in moving HPC into more of the core areas in chemical engineering. And if that's not true, then one of my panelists might tell me it's not true in really short order. But we expect to see a higher growth rate in chemical engineering over the forecast period because of that trend. HPC server shares, again, this was not everybody tracking all together. We saw a lot of movement here. The pie chart here has been updated in terms of the wedges are all the right size. I took the numbers off of it, but we have all the numbers, I promise. But I did put arrows on to indicate the growth rate, from the big green arrows growing faster than the market, the smaller green arrows growing along with the market, the yellow arrows growing slower than the market, and the red arrows declining. We did see HPE and Dell, the two leaders here, both grew enough better than the market that I gave them big green arrows, but not the really high growth that some of them like Penguin, Huawei, Atos, Bull had. The only two decliners really were Cray was obvious. That's the one case of a vendor that's easy to track because they're public and they're 100% HPC. So that's the one on this chart. We have one that we can just read their annual report and go, great, we've got Cray, that one's done. And then we've got hard work to do on all of the others. IBM also fell back a little bit. This has been disappointing. You know, this is a company that's having a great show here at ISC right now. They're the new top 500 list with Summit and Sierra, number 1, number 3. They got great quantum stuff going on, but in 2017 they did not have good traction with the Power 9 servers. They're going to really need to get that going and figure out how to start executing in this environment. Then notice there's still a healthy others category here. There are a number of smaller companies and resellers and VARs that you can buy HPC systems from, and plus the roll your own systems and white box kinds of things. That really does take up a large percent of the market. On the storage side, first thing I got to say is, don't give me a hard time about the term HPC storage here and go, well, EMC, that's not HPC storage. Okay, if I'm running an HPC application and using storage for it, we're counting it here. It's storage associated with HPC stuff. And Dell EMC really is at the top of that, because beyond just how much volume of VMAX they have in the world and how much HPC runs on it by accident, they actually target high-performance markets with VNXE, and which is now rebranded as Unity. They have a really robust flash area with Extreme I/O, which gave them a big bump and pushed them past NetApp when flash took off. Plus all of Isilon is in that bucket, and everything that Dell sold as storage before they had EMC. That really launched them into the #1 position here, and is probably the biggest potential point of differentiation between us and their close cohort with HPE. NetApp, that's predominantly going to be the E-series stuff, but they also, again, have a lot going on in this space. The trend that we saw last year is that more of the storage flowed away from dedicated storage companies and towards server companies that were also selling storage. Again, that's along with this theme that people were buying things that were more integrated. That doesn't have to be a long-term trend, but that is what happened in 2017. The dedicated storage companies were a little softer, and the server companies selling storage were a little stronger. AI, deep learning, machine learning. Did anyone hear anything about that this conference? This is the third year that's been a major theme. There's roughly $4.5 billion in dedicated machine learning spending in the world, but 95+% of that is coming from the hyperscale market, where you get the Googles and Facebooks and Amazons of the world who are doing a lot of dedicated deep learning. Of the measurable part that's not in hyperscale, most of it's in finance, in the HPC side. Now that said, we are monitoring the spending patterns and how it affects HPC, and 56% of HPC organizations are running some type of machine learning application today. The difference is it's not moving their budget, right? They're just getting told, do this additional thing within your scope, your purview. This is the same as happened with big data and analytics. The HPC guys have to run more stuff, usually on the same hardware, usually with changes to configurations, particularly with GPUs. And to the extent that it's part of the HPC environment, like in finance, it's already in the numbers we showed you there. But we can break it out. A few quick snapshots from our end user studies on surveys. I'm not going to read the introduction. It's all the methodology stuff that we published to go along with it. But the important thing to note is everything that I did up until this point is actual revenue models that we do. What we're about to transition to is raw survey data. which is an important critical input for the market model, but not the only input. And for us to earn the title of analyst, we have to do more than just automatically copy that over and say, well, it's this percent. We have to think about it and see what makes sense. And the survey data is important. For example, for top HPC system suppliers, we see it lines up a lot with how the market actually looks. But companies like Cray do get a boost because everyone who has Cray thinks of it as an HPC system, and not everyone who has Inspur thinks of it as an HPC system, even if it's doing HPC. So you have to model that a little bit. But where that gets really dramatic is on the storage side, because then DDN takes off. DDN markets so heavily to HPC that they show up heavy in the site census survey, heavier than their actual market share, and it launches them ahead of Dell EMC, IBM. So do expect DDN to say, hey, we won the survey, and that's great, and they'll do a press release, and bravo, they're showing a lot of momentum there. That's true. This is not the same as market share. It's showing essentially mind share within HPC, which is also a very important metric. Lustre has caught up with Spectrum Scale and GPFS in terms of the top file systems in the market, and that's a trend that we think is going to continue. NFS, again, is a thing that everyone has it. It's just a question of whether anyone thinks to put it on the slide as their high-performance file system, right? So that's a funny, like I could elevate that to 100% and it would be obvious, except really when people are naming what high-performance file system they're using, the parallel ones are going to go to the top. Interconnects and networks, I'm not going to read this whole slide. The most important thing is that we separate out system interconnects, storage interconnects, and LANs. And Mellanox has gained in all three. Most of Mellanox's gain is coming from the storage interconnect side, but they're even gaining in LANs where people want to go to a high-performance converged fabric. Top available applications is something that stayed fairly stable over time, and we track them all. You see that we've got about 1,800 mentions of applications in our survey database right now that we're tracking how they change over time. The big things that are changing, OpenFOAM still is growing very fast. It's been one of the highest growth areas, and now we're catching the machine learning applications. They're not in the top 10, but the top 25 now do have machine learning applications that are starting to grow in this space. The big challenge is, on the one hand, what end users are facing is I've got here this diversifying set of workloads. I've got all my traditional HPC stuff, and I've also got now analytics for the past couple of years, and now I've also got machine learning. And over here, on my other hand, I've got a diversifying set of technologies where I've got to choose what processor type, what interconnect type, how many tiers of storage. And the user is really afraid of getting burned, right? I'm going to go buy a bunch of stuff in this architecture, and then 4 years from now, that's not going to be what I wanted for this workload. There are precious few technology vendors addressing this head on. Everyone's selling their own solution. But anyone who has not only a spectrum of available solutions, but the ability to guide and say, here's what we recommend for what you're facing, your diversity of workloads, would have a major competitive advantage in this space. And that's what we're waiting for to have develop, either from a major system vendor or from a major cloud vendor that can offer different type of instances. So that's my market update, and what I'd like to transfer to now is the analyst crossfire portion. If my panelists would like to start coming up, and hopefully we've got everybody here to take their places on the panel.